Hey Alpha fam, welcome back to another episode of Alpha Commission. Today I just want to go over a little bit of an update since we did have a kind of a pop-up and then a turnaround in the market. And after that dramatic drop and that sudden shoot up from the other day, it just may be good to cover a couple basics here. The other day I was saying that I didn't think that we were going to just bullishly take off from here. A lot of people on Twitter, crypto Twitter, they're saying, "Oh, we're gonna get bullish from here. I'm gonna be super bullish." But you know what? The EMAs on the daily were just telling me a different story. And for me, I think using those EMAs is always something good to just check right off the bat. We had this negative crossing on the daily. It was looking like it was threatening to do what it did over here. Okay, this formation and this formation had a very similar setup. And when I saw this kind of crossing with the 50 overhead and all these pieces pretty much in the same position, I just felt we're not going to be popping up, we're not going to be flying off to heaven here. We're definitely going to, go down. And that was my first indicator. I don't know how far we would go down or anything like that, so I tried to make some concepts for you. I drew out a wedge, and just on this move for the fibs, kind of showed that we were in not a great place on the fibs. This wasn't really a bullish, a retracement or anything. We were just in this kind of like a no man's land. And if you looked at the wedge that I was drawing, it was kind of like we were just crawling up the side of it. And it's wicked down before. Maybe we're gonna wick down again. We've kind of had these long breakdowns. Some type of sudden bad news could easily pop us down. So just something that you would want to wait for some type of confirmation. And for me, in order to undo those EMAs, in order to make them not bearishly cross, I would want to see us to get back up here above. That's why I marked off this inner wedge, just because if we got up here, then I would start feeling a little bit more bullish about this setup. And it would also be in a much more bullish area of the fib retracement, okay? Like this could have been just a massive fake out, some type of a bear trap. And then, if we got on top of this wedge, which again, I drew the other day, right? Like a couple days ago. If we sat on top of it, these EMAs would continue to flow on the daily, and at least we'd have another chance to get up here and make that possible inverted head and shoulders. And if we did get that inverted head and shoulders, then of course, the thing that we would be looking for is a measured move on it, where, and again, this one is invalid, I think. It's invalid because this shoulder dipped too far down low. But had we gone here and this just ended up being kind of like a flash wick within one day, then maybe we could have, just wicked and made this a shoulder about the same size, in which case we would have a nice measured move to the upside, which would bring us somewhere in this neighborhood in the mid 50,000s. Okay. There's many different ways to formulate, how we could possibly get to the mid 55,000, to the mid 50,000s. But in this case, that's just one, just using basic structure. Using different indicators, there was also some hope for this, and using different metrics. But all of these indicators and the metrics, and it doesn't matter if you're using the EMAs or you're using fibs or you're using structure or you're using whatever, it's all built into the price action. Okay, they all drive, their conclusions from the same price action. So, we all get to these conclusions in different ways. It's very cool to see us get it to it in different ways. And just make sure that you don't criticize people too much for using different methods than you, because the whole point is that, after about a year or two of trading, you start seeing the connections between the points on the graph, right? And some people who focus on fibs, they start seeing it in the fibs. People who just focus on price action, they start just seeing it in the price action. People who use indicators, like I like to use the momentum and the RSI and the Stokes and all of that, we start seeing it in those tools. And it's all the same stuff because it's all derived from the same price action. It's not like one guy has a special advantage. It's just that one method may be harder than the other, and one method may give more false positives than the other. But in the end, it's really cool to see all these different methods work out. And so be open minded and maybe find the tools that work best for you if you're a new trader, okay? Don't get overwhelmed by any one particular method. Like if this is confusing for you, all these fibs, you know, you don't have to use fibs. You can use other methods. There's plenty of traders who don't use fibs at all, okay? If you don't like formations and wedges and head and shoulders, you think it's all mumbo jumbo, or you're just not good at thinking geometrically, then don't use those type of constructions. Use some other method. We don't have to be doing things the same way, and it's very cool to see things in a new way. So I definitely encourage you to explore the different tools that you have. But this is one way that I was looking, and you can see how I used this in combination with the EMAs. Now, the EMAs were basically like these lightning bolts coming in, these moving averages telling me, uh-uh, you've been blocked. You've been blocked from this upper side of this triangle. So you're going to go down. You're going to go down. I've already shown you how you can go down once. This is how you're going to go down again. And so I was like, nope, probably going to break down here. I'm not going to take this bet. Going to wait for some confirmation for us to get in this area around 42,000. We didn't get there, okay? And so what's happening? We're breaking down as I suggested in the previous video. So getting outside of this wedge, now we can think, what are we looking at here? What's the plausible scenario? Well, this setup I actually drew out a day or two ago in the Discord. So if you're in the Discord, there are some advantages that we can have additional conversation, but it's not too active right now. A bunch of the guys who were there, they started their own Discords, a couple paid Discords, or you pay for some membership. And those are great Discords too. I hang out in one of them, and I really love it. I mean, just my friend CryptoRetta and Athena, they're just doing a great job with their AR collective. And I think anyone interested in that, it's definitely worth the fee. And but they're very selective about who they let in, and they have a cap. So good luck getting in. But that's an awesome group, and I'm just so proud of all these guys taking advantage of the opportunities in front of them to help teach other people. It's just a really cool thing. So right now, Alpha Commission's a little bit slow, and I would just love to have some fresh blood in there if you do want to join. We're just having casual conversations. Again, it's a free group, so it's not like it's really dedicated to be focused on you or anything. But if you want to contribute something, maybe a little bit of your research, go ahead and join, or if you have some thoughts or want to point out something wrong, go ahead. Like maybe we'll share your idea also. But just this setup, I did share it in the group, and I was saying, you know what? I think a lot of people are basically saying we can bounce from here, but I was kind of targeting this lower area first. And you can see this area that I targeted out. We're starting to come to it, right? So we're just there on the box, and you know, I think this technically counts as it being hit. We have wicked into the box. We did meet resistance at this golden line that I marked out. The golden line, of course, is just something that I was looking at because if you look on like the 5-day, you just notice that the chart gets divided up here, right? There's a lot of bouncing here. There's a lot of bouncing here, right? There's something under here. And then, of course, there's this other golden area that I have, which is the bounces here and here, and here, and here. And these two zones, I'm just dividing the chart up with them. But this one in particular, the slightly thicker one on the bottom, is the one that I consider that Bitcoin has to hold the line. I've made a couple of videos about it. If we get submerged under that line, I think that we're going down. I think we're going down. And so I don't want to see Bitcoin trapped under this lower line. I think that's going to pretty much make us enter into a bear cycle if we just get trapped in this area for a little bit too long. We're going to sink in those Gaussian channels that I'd been pointing out, right? So if you've been following Alpha Commission, I've been showing you the Gaussian channels for weeks now. And some other guys do talk about it, like one of my hero traders. It's Eric Crown. He used to call himself Crown's Crypto Cave, but I think he's calling himself Eric Crown Crypto now, using his name. And he's just a great guy. I mean, I love his trading. He just focuses all on his technical methods. And I didn't learn this technique from him, but I did notice that occasionally he goes over it. And uh, I think I learned to use the 5-day from him. And if you look at it, we're breaking down. We're breaking down. I've been showing this for weeks. I've been following it from here, and followed it when it retouched. I followed it when it hit the bottom. I followed it when it tried to escape. And then I was warning you, uh-oh, guys, like we're wicking down, and that's not good news because this is like a tar pit. You get stuck in, and you just sink. You just sink and go extinct, right? Like any other creature falling into a tar pit, you just sink and you go extinct, right? So the chop and the drop. Let's call it the chop and the drop, and it just plays out. If you chop at the bottom, eventually you drop. So we're looking out for that. Of course, these are extraordinary times, and maybe something can pull us out, or maybe we can just wick here and we can get back up for another chance to swim to the surface. But we look pretty stuck to me, and I hate to be a pessimist because I was very optimistic. I think I even made a video where I was mentioning, I'm midterm bullish on Bitcoin, and we were either here or we were here, and and I told you, but I didn't want my feelings to be biased, right? So oftentimes I show you the worst case scenario because I don't want my optimistic feelings to bias anything that I'm talking about. And so if I do feel optimistic, I'll probably show more bearish scenarios. And if I'm feeling bearish, I'll probably show some more, optimistic scenarios. Why? Because I don't want my bearishness to blind me from any possibility of some bullishness in the market. So I'm going to go over, some type of bullish scenarios also, because for me this is a pretty bad deal. Okay. So again, if you look at the golden zone that I was talking about, let's see which one was that. Yep, right. Oh, yeah. And I didn't even create this with the Gaussian channels in mind, but oh wow, look at that. Perfect. Yeah, this golden line that I drew, I drew it way back, like I don't know, like way back here, right? So this golden line that I set, um, the Gaussian channel is curving right into it, and we're now getting under that golden line, the body of the candle, right? There's quite a lot of time to close on this 5-day because again, this is using the 5-day picture, right? But it is only 12 hours. So if we do close under it in the next half day, that's a very bad look. That's a very bad look. And it's kind of freaking me out right now, to be honest. This looks pretty bad. But we don't need to focus on that too much because there are other things going on that we can take a look at. It's just that I've been pressing this on you since all the way it's all the way in January. So for weeks and weeks I've been talking about this, And I'm just emphasizing it a little bit more each time I talk about it because it's looking worse and worse every time we talk about it again. And I just want to point out that again, it's like sinking into a tar pit, and the creature is like making these air bubbles, and the air bubbles just get bigger and bigger as you go along. And at some point, you get to this point where you're making huge air bubbles and you're trapped underneath, and all of your air just, you've lost all your air, you're drowned, okay? And then you're gonna go down to, using the EMAs again, you're gonna go down to these type of levels, which is probably gonna be approximately, you know, $26,000 area is where I would target. I don't know where other people are targeting. For me, I look at possibly the $26,000 area. Of course, we don't have to. We could go sideways and just chop sideways. But personally, based upon the history of Bitcoin, whenever we do end up drowning in this tar pit, we end up going to approximately what would be that region of $26,000. Sometimes wicking a little bit lower, just depends, okay? And it can take some time. You can just chop it out. You can wick it down, pop back up, wick down, pop back up, wick down, pop back up. You can even swim for dear life, but you're still stuck on that bottom for quite a while. So you can go sideways, or you can finally drown. Okay? Okay, I've overemphasized that. Let's move on to something else. Let's see. We've got these arrow patterns that I was talking to you about, which are pretty cool. Um, let's see. Turn off group 2. Yeah, the arrow patterns worked out, guys. So I'm glad I showed that to you because it was a good warning to anyone in the market that this fractal was playing out. And I was telling you, this is probably one of the more dominant fractals that's been playing out in a Bitcoin. Just this weird psychology of price action in the downtrend, where you get these M patterns, which are more or less even on whatever diagonal they're on, right? So this is a diagonal, this is a diagonal. It's basically just a little channel, but it's basically an M formation in that channel. And then you get a pop up, and it's almost like it's always a fake out, right? You get a pop up, and then you get a dramatic fall underneath the bottom level. Okay, it can be just about even with the bottom level, but often it's way down below, right? Way down below. And so for this one, I had been getting a little bit optimistic when we were up here, and this M pattern should have warned me not to be optimistic here, because we didn't pull down lower than the M yet, right? If the M is like this, these 2 points maybe, then we should expect in this area at least, kind of where we are right now, at a minimum, if not lower. And so, well, maybe because this is all angled up these days. Previously they were angled down, but now we're kind of like angling up, right? So maybe if we angle it up, then we've met that condition for this M pattern to work out. We're now below this diagonal that the bottom of it creates, and so basically I don't know how far we'll fall based on this fractal. All I do know is that now this one is in its completion mode, okay? And when I was looking at it up here and being kind of bullish for like a head and shoulders to play out or whatever, I forget exactly what was going on at that time, but it may have been just a little bit too enthusiastic. Okay, I was looking for a head and shoulders, inverted head and shoulders, but maybe I was a little bit too enthusiastic because this pattern has been so strong. It should have given me a warning that, hey man, your own fractal that you made up, right? Your own fractal is telling you be on the lookout for this drop below the M. And I'm glad I had this because, it gave me the confidence to realize, when I started to turn bearish, that this is probably why, one of these fractals might be playing out again. So I always take a look at those fractals. And this appears to be the dominant one at this time. Let's see. So where might that bring us to? If just following the kind of history of it. It could bring us just to here, right? So this kind of like 37, $500-ish region. Maybe 35, 500, all right, 36,000. Or it could bring us all the way down to like 33,000, right? If you just like look at these more aggressive ones, right? And so that would be approximately the regions that I would be targeting just based upon this like M fractal, which by the way, you should not trade on fractals. I'm just sharing them with you because, we're cool, right? So, okay, moving on from the fractals, just wanted to check out these horizontals just to see what's going on here. Well, yep, I mean, what can I say? We bounced, you know, we bounced almost exactly to the dollar on these golden ones that I've marked out right here. The tops of them are basically sitting on this one. The midpoints appear to be here. There was a nice bounce right there. And then we got hung up on this one right here. And I haven't marked off much on this one. Let's see if I have another chart. Let's see if I have another chart with these things. Get to that later. Oh, that one's too early for you. This is going to be very cool when you see this one. This is not ready yet, but this one is very cool. So I'm just going to wait a little bit before I show you that. You got a little sneak peek there. But yep, let's see. Maybe no, that one's. Let's see. All right, well, let's move on then. Just yep, on our kind of origin lines here. You can see how we got hung up on these origin lines. Found support on this one, kind of bounced off of it here. Tried to reach up, failed, fell down. Tried to reach up, fell down. Kind of bouncing off this one right here. So this one was another important one. And now we're breaking through. Well, what does that suggest? Every time that we've broken through this dominant purple one here, which you can see, right? It was above it, kind of fell below it, wicked all the way down. Got back on top of it, bounced, got on top of it, bounced again. Tried to go for the red one, tried to go for this dominant red one, fell all the way down, once it lost the purple. Had to grab these, kind of a dominant green over here, right? So we got kind of this dominant green one down here. Got another dominant green one down here, right? But it fell even through this dominant green one. And, of course, this one caught it right here. And so if we do end up falling, I might expect some choppiness, but we could come down as low as this, like, 34,000, right? And if we break through that the way this one just broke through this, then I would expect maybe something like 30,000. Or if time's moving on and we're falling more over here, then, yeah, around 30,000, maybe wicking down to this 28,000 level. And this is how I'm using these kind of like anti-origin lines, these origin lines going in the opposite direction. I've never heard anyone really talking about them. They're kind of just big channels that I point in certain directions, and they're not always so perfect like this. It just so happens that this formation looks like this. Often they're kind of chaotic, and I can show you the chaotic ones, my radials. I call them radial when they kind of point to one area. And look at this. Look how beautiful this is. If I was just using horizontals, I wouldn't have seen this, but because I had my radials on, I could see it, right? We lost this. See, we tested it, bounced up, fell through it, broke down because this was a dominant red one. When we broke through it, we fell all the way to that purple one, bounced up, got onto this golden one, bounced up, you know, broke down, and when we lost it, we fell all the way down to the purple one. Now we're losing the purple one, and look, I have to make yet another radial. I have to make another radial line. I don't know where this one's going to fall to, but it's going to establish my next radial line. And you can see this was pretty horizontal, right? I mean, it was basically just like these normal like diagonals. And then it started getting more steep and more steep and more steep. And you see, you can't see this with horizontals, but you can see it with the radials. The more steep that the radials get, the harder these things fall down. The more distance there is from this radial and this radial, you see this fell. I mean, this jumped from this radial to this radial, and it was a very steep jump. This fell from this radial to this radial. Remember when we didn't have the radials on, it was just like, well, why did it fall like that? If you have just your horizontals on, you say, why did it fall through all these horizontal levels? You can't predict why it would fall through all those horizontal levels. That's crazy. We have all this support. Why did it fall through all of this support? Well, people using, yeah, even though these horizontals were very strong, right? Well, if you were using my radials, you would have seen. Well, it bounced here off the radial. It touched the top of the radial. It got to the bottom. It broke down. And where's the next support on a radial? Well, you have this little mid one, right? Just barely. And so, it tried to catch itself in this lower half of this section, but it hit this dominant radial. And it bounced up to the midline, caught itself again on this radial, flew all the way up to the midline, and then all the way up to the next dominant radial. Broke down, just kind of grabbing this middle radial, and then fell all the way down to this dominant radial. And again, if you had been using just horizontals, you would have no idea how to predict that, right? You would have no idea how to predict that it went through like a couple of these ones and it went up through a couple of these ones, right? And what was this crawling on here? Why was it moving up like this? This 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 formation is just chaotic. I mean, of course it's respecting these horizontals. That's why I use horizontals as well. I don't want to diminish horizontals. I'm just emphasizing because I think for a lot of people I'm introducing this concept. In fact, I'm the only one that I know of who uses this method. Probably because it looks kind of silly and I kind of like rainbow code it, and that might you know rub people the wrong way. It might look ugly to them. It might look messy to them. I don't care. For me, look at this. Perfect, 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 perfect. Drop all the way to the next support. Pop up to the midline. Perfect, 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 perfect. Midline. Perfect, perfect. Right? Got hung up here. This one, I would expect more resistance. Yeah, it did test it, but this one actually just fell straight through. Probably something to do with the Russia, or maybe just reclaiming this candle. So this was really the only one that didn't have what you would expect. And what did it do? It just broke down so hard and so fast that again, everyone was freaking out, right? Oh, right, right, right. It was it was nuclear war, right? The nuclear power plant being attacked or something. I don't know. But anyway, we caught ourselves on this dominant one, right? And we created kind of like a backup. And then what did we do? Even after falling off of this one, now we caught ourselves perfectly on this dominant one. And so we've now tested this dominant one twice. This purple dominant one right here and right here. And we're breaking down still. So these radials really give you a good idea of what's going on. And then what would I be very concerned about? hitting hitting 30, let's just say 35,000. Because if this breaks down off of this purple radial, you're talking about 35,000 next, okay? 34,500, 35,000. And of course, there might be some midline here. So, we can kind of see that it's either going to be this one or this one right here. It's just this kind of like area. What do I got going on here? right? Just this kind of area. And so that's going to be approximately 36,500, maybe 37, maybe 36,500. Probably right here. Probably this 37,000. And so if we go back to my target, what am I targeting? Around that 37,000. Okay. And why might I also target that 37,000? Because we do have these diagonals. We do have this kind of like a crazy channel going on here. Again, we saw the wedge, right? We already know about the wedge. But we also have these kind of like, just the support diagonals. And there's kind of this mid one right here where we hit it and then we bounced up and are falling down. Hit it, bounced up, now falling down. Broke through it here, but we caught on the secondary one. So this is the secondary one. And although we are getting caught up on the monthly, I believe that's the monthly support. Where am I? Where's my chart with the monthlies? This is chaos. All right. Well, I've got too many things going on here. I have to find my other chart. What about this one? Nope. Hmm. Alrighty. Well, let's see. Big channel paths. We still have this fractal suggesting that we could still be going down. And I think I want to adjust my DCA zones. So probably because of that monthly support, this is actually a pretty good place to DCA if we do have a bounce. And if we probably gonna move this one too. Yeah, I'll have to redo my DCA zones. But yep, these are what I'm thinking about today. So yeah, we called that drop. A lot of people were getting bullish, and there's some good reasons to get bullish, right? So the first is that we're not like sunk yet, right? We're not sunk yet. We do have this type of formation going on where if we hit the bottom of this, right? That's what I want to talk about. If we hit the bottom of this kind of triangle formation going on here, and let's say that this is the bottom, okay? Or, we can even bring this down. Say this is the bottom, somewhere around here. If we grab onto this area and we can just bounce up, then, maybe we can get back into this bullish area because top, bottom, bottom, top, top, bottom, bottom, top, top, bottom, maybe bottom, top. We're in that bouncy area. And I'll give it a wick. I'll let it wick all the way down into this area where it's already proven that it can bounce from, on this type of diagonal structure that it has. And then, if we break down from there, I'm gonna start getting a little bit worried. Yeah. So this is what I want to talk about. My worry and why I might change my DCA zones, okay? So first of all, we have this very weird structure that just formed, which I don't like. Okay, I wish we had a bigger bounce. If we had a bigger bounce, then what I'm about to show you wouldn't play out. And a lot of you can probably guess what I'm thinking, because I think about it a lot, right? That's a diagonal head and shoulders. And I haven't heard anyone like point this out or anything, but the technical target for this one, which by the way, this one looks pretty legit. Okay, like this is kind of rounded tops, but that's pretty legit. 33,000. 33,000. And there's a problem with that. There's a problem with that, right? Because look, we have our high, and then we have a lower high. We have our low, and then we'd have a lower low. So what would that be telling us? That we've re-entered a downtrend, right? As long as we stay above, call it 34,500-ish, at least we're just in a wedge. We're just in a neutral pattern. But if we break down below this low, you know, we're we're in a downtrend, right? And you can kind of see it right there. Look at that. We're in this downtrend. Boop. Right? Like this was just exuberance of the market. Like just ignore this, okay? Like you don't have to draw your line from here. This could be, like blow off tops and stuff, right? It's just exuberance in the market. And this could have been a little bit of exuberance, right? They push the price up and then people get pretty excited and then they like drop it to like take their liquidity, right? So, just, ignoring the tops of these structures, you can see there's a lot of price action on this diagonal. And then if we get this one, wow, look at that, like you know, and again, we don't have to use the top of it. We can just use like this. Maybe something like that. And you can see we're pretty much going to be in this very bearish downtrend, which it doesn't need to be perfect, but I'm just trying to make it more visually, easy to see, where Bitcoin basically just did this, boop, 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 and it's just going down, right? Like that's basically what Bitcoin has done. And you have to be aware of that because, again, if that's what we're doing, then we're getting underneath those Gaussian channels, right? We have a high likelihood of drowning, and so I don't want to see that happen. What I'd like for us to do is just, stop in this area, worst case. And so I'm not sure how I'm going to DCA under this price point, under 34,000. Let's just say 35,000, under 35,000. If we can stop, let's see, if we can stop somewhere like here, like, yeah, 37. I think this might be a fair zone to DCA in, right? Like basically anywhere that we are right now until here, for me, is a pretty fair DCA zone. And I just want to put that in context because we could be having this type of formation, which I've talked about before. Or maybe we just have a channel like this. And I don't know, it doesn't have to be perfect, right? Something like that. Could be even more horizontal, something like this. I mean, sorry, more parallel. And maybe Bitcoin's just doing something like this, right? Boom, 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 boom. That'd be cool, right? That'd be cool. And I think a lot of the market is still open-minded to this. And as long as we keep that higher low structure, there's a possibility this is playing out. Or maybe it's not going to be that bullish. Maybe it's going to be, maybe we're going to do something like this, right? And get rejected. And then, get into that Gaussian strip. But the whole point is, like, we can still go up, right? Like the likelihood is that we're in an uptrend. And the thing is that if we break structure, we're not. So this head and shoulders does have me a little bit freaked out here. It's not what I want to see, and it changes my DCA zone concepts because once we break this structure, this is more of like it's more like a warning. It's more like a warning. We're also going to break this low. I mean, it will basically double bottom. Well, a double bottom on a bigger time frame could be okay, but if we get under that, then I'm gonna maybe not DCA, anymore, right? And I'd like to DCA in this zone just while we have a bullish structure, even though this was kind of bearish, because we might get a bounce inside of this wedge, right? This kind of wedge. So we have this one. Maybe we just bounce here. And then we might do this and break out. Or we might kind of go like this and, break down. But this, I think, is not the worst strategy to have to buy in this area. Basically anywhere where we are right now in price, in that kind of box. It's not the worst. It's not the worst idea. Like this isn't death, right? Like we could hold on to this line, but if we break that line, then I think, yeah, this shouldn't be green, right? This should be red, right? Should be I'm leaving this, okay? Like sayonara, right? We're breaking structure. Like we're gonna get back into this downtrend essentially. And so the measured move on this head and shoulders, it's a very dangerous one. Just it's just amazing that it brings us to a double bottom and then also a market structure break. Like, give us a chance. Give us a chance, Bitcoin. But Bitcoin's relentless. These guys, who control the markets, they know what they're doing. They're not gonna make it easy for you, okay? And of course, if we take a look at our USDT, USDT is popping up there. Oh, wow, that's a bullish formation. It was going down for a while, but look at that. Look at that bullish formation. You guys, you guys know what I love. You guys know what I love. Boom, 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 boom. So it's the opposite of Bitcoin, right? It's got it's got a head and shoulders that has us going this way. Boom. Right? Breaking into new territory. And what did I tell you about that when I made an episode about this, right? Look at this. Look at this 80s style hot mess, okay? What do I got going on here? Okay. So we've got like just a bunch of possible trends and midlines and things like that. I look at it at log and I look at it on linear. But let me just delete some of these. I know it's really weird to see all these lines, but keep in mind, I'm doing them for myself, right? Like this is a free show, so if I ever get paid someday, then I'll let you know that I'm making it for you. But for now, I'm making it for me, okay? And so this is what I like. I like to see that this green area, that's a it's a pretty you know this means that the market has been fully saturated basically. You know, all the money is in crypto, and so most likely there's going to be a turnaround. And as we're getting kind of bullish on the USDT, USDT is like dollars. It's like it's just money. Okay, it's like instead of owning crypto, you own dollars. And so if the amount of USDT goes up, then that means the amount of crypto that people are owning is going down, most likely. Okay, because you wouldn't hold USDT unless unless you didn't want to buy Bitcoin, that kind of thing. If you didn't want to buy crypto, you're going to put your money in USDT, right? Because it's a stable coin. So, this show assumes you know some stuff about crypto already, but if you don't, then I recommend you look into that. We had this type of crazy range in the beginning, but then you could see it started to top out in certain areas. And look, we haven't topped out. We haven't topped out anywhere. We have this line, but we didn't reach this area yet, right? Where you could have an extreme kind of crash in crypto. Because again, this is the stable coin. This is what people have when they're trying to get out of crypto. So the more it is, the less crypto people are owning, which means they're selling all their crypto and getting USDT for it. So we have a head and shoulders that points us into this area up here. And that's not good. That's not good. Okay. That suggests that there's going to be another crash. But it's hard to do, TA on USDT because, of course, this all depends on if people want to sell or not. And so it's kind of like the chicken and the egg, right? It's kind of like the chicken and the egg. You're not really sure what's driving what, right? Are people just really, they just really want to get back into dollars? They want to get back into their USDT? And so, is this chart really driving anything? Well, maybe the psychology of the world is driving people in that direction. So maybe this chart does drive the market, at least the psychology of this chart, even if people aren't really trading this chart, because of course you can't make profit off of USDT. But, you know, I mean, maybe you could stake it or something. But, just think about it, right? Just think about it. Looking at this chart helps you just look at the market in a different way. And you don't need to look at all the stable coins or anything. You can just look at USDT. A lot of people make a big deal out of, other stable coins and adding them all together and blah blah blah. Yeah, that's cool, but you just need to see the direction of the market. You don't really need, the dollar amount exactly, right? You can kind of see the trends and whether we're pushing up or pushing down and whether it's bullish or bearish. You don't like what's a couple, dollars going to do to change anything, right? Oh, here's another cool one, man. I'm going to show you this chart someday and it's going to blow your mind. Let's see. Yeah, ETH dominance. The dominance of ETH is getting to an interesting spot. See, this one also suggests to me. This is another chart. I should just have an episode just about this. But this is also, getting into this place where you kind of want to buy ETH, right? Where it shoots up, shoots up. Man, I'm showing you like all my secret stuff. You're getting the previews today. You're seeing all my secret weapons, okay? So I got stuff lined up. But it's funny, I can't find the one chart that I wanted to find, but I'm showing you all my secret stuff. Let's see. Let's check out the grayscale. See how this is going. Wow, grayscale died. I told you if this fractal got broken, something's wrong with the market. Okay, like the psychology of this smart money, the grayscale Bitcoin Trust smart money, like it got broken. It was going so well, so well. It was going perfectly, going exactly to plan, exactly to plan. This was all working out. We had figured out the logic behind grayscale. It was going perfectly. And then Russia invaded Ukraine, right? Or they made some extremely harsh action right here, right here. Like this is the point when the market was supposed to be pumping, and the smart money was like, you know what, nuclear war doesn't sound like it's for me, you know. And they're the smart money, right? They're the smart money, so they're saying like, you know what, we can change our plans. Change our plans, and what happened? It broke straight down to support. And look, that's awesome. It broke down to the support that I had marked out, almost, almost to the dollar. It broke down to the support that I had marked out, which means this concept, there was legitimacy behind this concept. But nuclear war is a new concept for Bitcoin. Okay, like Bitcoin's never been tested under a nuclear war situation. People can say that, oh, this was the oligarchs, and even I have that concept. Maybe the oligarchs were, collecting, the Russian oligarchs, the super wealthy in Russia who are being banned from using dollars and everything. Maybe they were just getting into Bitcoin. But it's kind of convenient that it followed the fractal. So I think it was just the smart money in general, right? They're saying, "Oh, hey, the oligarchs are going to need Bitcoin. Let's get into Bitcoin," right? And then they're saying, "Cool, maybe this could continue." Right? Let's mark off our bullish psychology. This is like how the smart money thinks, so let's continue the way that we think as usual. And then, oh, nuclear war possibly. Yeah. Yeah, it's not worth it, If a nuclear war breaks out, I'm going to lose all my money and all this stuff. So I better get out of my riskier assets. And now we're just breaking down. Like this isn't normal, right? I mean, there's one possibility, which is that this curve is now being accelerated, right? So this cycle, because we did max out right here. We did max out that first level. And then if we just like bring this psychology forward, maybe that's just what's happening. And you see this kind of like a toe dipping down. Maybe this is just like dipping its toe. And so this is kind of confluence with what we were looking at on the Bitcoin chart, where the Gaussian channels were saying, hey, if you break down anymore, it's not going to be good. And likewise, we have here, like you can just have your toe dipping down, and then you can make another, attempt. But breaking down from here, like there's not even like a concept. There's not even a concept for the grayscale chart. Bitcoin does have the concept. Bitcoin has more price action lower than grayscale. So this is fascinating to watch. This is interesting to see what grayscale does next, because Bitcoin is not in that same position. For Bitcoin, you have all this area. You see all this area down here? Let me just mark it off. All this area to play with. And you still haven't broken this previous low on these huge time frames. But for grayscale, they've already broken down here once. All right? They flirted with it here. And if they do it again, are they going to break down? And if this is the smart money, are they going to be the leaders that just wreck this thing? Because, if these billionaires and big institutions flee Bitcoin, start selling off their Bitcoin, is that going to push the rest of the market with it? I told you if this psychology breaks down, something's wrong. And we have to watch this, okay? We have to watch this pretty carefully. Okay, guys, that was another long episode, and I'm so proud of you for sticking with me. Uh, I just appreciate it. It's good to get these thoughts out and know that some people are listening and that some people care about these conversations. So if you stuck with it, just thanks, and see you in another episode. I will try to start making shorter episodes. It's just there's a lot going on in the world, and it's very interesting times on this chart. We're testing all of these new concepts. We're testing all of these new stress tests on Bitcoin itself as part of the financial market. We've got all this stuff going on in the world, and so there's just a lot to consider. It's just a lot to consider. And every time we look at these charts, we're really looking at people. We're looking at people, how they use their money and how they think about their money in these crazy times. And so it's just very fascinating to look at it in detail. If we're pumping, probably not going to go into that much detail, right? But you know, to see how we hold the line and how brittle we are, that's fascinating to see how people think about their money and how they think about crypto in these times, in these chaotic times. It can define our entire industry. Whatever the conclusion is, if people decide, okay, I'm going to hang on to my crypto even during nuclear war, that's going to define what crypto is for the next 10 years. If people say, no, I'm going to abandon it as fast as I abandon AMC and, any of these meme stocks, then that's going to define Bitcoin for the next 10 years, right? Because people will know whether or not it held during this time. And I don't want to put too fine of a point on it, but what's happening right now is really important for the future of our market. Do the products in our industry have the ability to stay reliable for people? Or does it all just collapse like a house of cards? Like so many things will, right? So we'll find out. All right, that's your alpha for the day. Stay safe, guys, and happy trading.